Welcome. This is Power Trading Radio Live, fueled by Online Trading Academy. For more information, visit powertradingradio.com. Now, here's your host, Merlin Rothfeld.
Hello, everybody. Welcome to Power Trading Radio. I'm Merlin Rothfeld, in with you for your shortened week. Yes, that's right. I didn't forget today. Normally, when we have these shortened days or a day off on a Monday, I always forget, and I call it a Monday. It's not a Monday. It's a Tuesday. It's Taco Tuesday out there. Hopefully, one day we'll pick up a sponsor that actually brings us tacos here in the studio. That said, I'll have my tacos this evening as I go to my trivia nights. Now, we'll talk about some trivia today. We look at these financial markets, which are kind of all over the place today. Started off on some very negative note, worked our way into some positive territory for the NASDAQ. The others just languishing a little bit behind. I'll get to that in just a second. Our guest for the show today will be Wayne Citron. We're going to talk about Fed Fund futures, see if there's any change in the forecast or what might be on the horizon for the Fed and their rate-making decisions, and if they will continue to keep the bottom underneath this market and prevent it from falling, as many people believe that is the case, and that we'll never see another market crash. I think that might be a little far-fetched, but the news is we have the Fed backing this market to the upside. So Wayne will be our guest on the show, second and third segments. If you guys have questions, send them on in at powertradingradio.com. Click the little button there that says Power Blast. Send them on in. Hopefully get to all those as we progress through today's show. Or join our YouTube channels. We've got Big Eb, Patrick, Liberty, I even myself commenting on social media today. That's on the Power Trading Radio YouTube channel, and Jorge as well. And then over on our Online Trading Academy YouTube page, we got Dana and Gayer. Hello, everybody. Hope you had a great weekend. And again, send in your questions. I'll try to get to all those as we progress through today's show. All right, let's start things off with the underperformers, the worst side of the markets today. We'll start things off. TJ's probably going to tell me that he can't show the charts because we had a whole system reboot today. But the good news is we have the technology and we can persevere. There we go. He'll be showing you very shortly a chart of the U.S. 10-year note futures contract. As you guys can see here, we had a nice big green candle today, which means that the yields were falling. Yield was down 2.02% today for that 10-year Treasury note. Nothing out of the ordinary. I think the important part here is the formation. For those of you that are trading that 10-year, notice that we really are just seeing consolidation, right? Think of it like a pebble being dropped in the ocean or in the water. The first ripples are more aggressive, and then it gets calmer, and then you're basically waiting for that next stone to drop and have a big rally, or big sell-off. Either way, we're looking for a big move out of here after a period of consolidation. My guess is you'll probably see this continue here for that 10-year. That said, it was our worst performer, down 2.02% to a yield of 1.556. So for those of you looking to refi, it might be getting more and more attractive as we go forward. All right, number 6 was our S&P 500. Here is your ES. Down 0.29% on the day. And to me, that's not the big story. The big story is really the resilience of it. While you do see a red candle here, we were down much more earlier, and then it rallied back up. Now, yes, it's a red candle, so we were down 0.29% on the S&P today, but it's just not letting bad news prevail. It has still got this bottom underneath it. I have a theory on what might be helping that, and I'll tell you guys that here in just a second as I show you some more charts. So that was number 6, was the S&P down wouldn't that be crazy, 2%? 0.29%, and that moves us to the Russell 2000, which also tried valiantly to get back into positive territory, but it did not. Ended with a small red candle on the session, just eking out the S&P 500. It was down 0.24%, finishing the day at 1,683. All right, we're getting close to the podium. Maybe we get something into positive territory. NASDAQ was positive, but didn't make the podium, just missed it ever so slightly. It was up 0.02%. The formation there, again, showing a very nice bullish formation. Of course, if we look at this on the triple Qs, you'd see a very different picture. But all in all, an unchanged day. It was really a gain of 0.02%. NASDAQ Composite finishing at 9,732. So, and actually you can see that just slightly above the close that we saw on the previous trading session. So not big news out there. Again, it's the resilience that I find more impressive than anything from these market indexes. Started off on a negative note, but just continued to rally and shrug it off. All right, podium time, and it has nothing to do with market indexes. That's right, we'll start things off with crude oil, our bronze medal winner on the day. Continuing its break above, what was noteworthy about this crude oil chart today is we had this little, I don't know what color it is, I'm going to say blue line drawn, which crosses the highs from the 6th of February. You'll notice that on our Valentine's Day session, we did break above that, but we didn't close above it. At this point now, it tells me, and of course I could be very, very wrong, that's okay. It's just the rules that I have in my trading plan, which ultimately is what your guiding principle should be, and your rules may be different. At this point, we have a close above that line, which is going to be right around 52.20. We closed above that today, which to me says we are going to be looking for higher highs here on crude oil to the tune of probably about $1.50, $1.75. So for those of you who are intermediate to shorter term traders, you might see some nice moves up here in crude oil, but make sure you use stop losses because as you saw today, long bottoming tail on this candle here, which could have easily have ripped you right out of that one. All in all, crude oil looking very nice. We've had that double bottom formation, now potentially starting another uptrend. And that's your bronze medal winner. We'll go to gold. That's our silver medal. Gold takes the silver. Oh, the irony. What's noteworthy about gold today is look how aggressive that move was. Not only was it a really strong bullish move to the tune of 1.14%, but it also ripped through that high that we saw on the 3rd of February. That is a very positive thing. Now you are looking at these highs that go all the way back into January 8th to be precise. That's the important level now. This is what some may call, I don't want to endorse it because I've had the comment from a few viewers. They are saying that this is an ascending triangle. I don't believe it is, but it is showing higher lows, and that's a sign of strength for this one. So all in all, gold is looking rather good. We had talked about 1,700 being kind of the target, at least my target for the year. I don't see that being an unrealistic goal, especially when we take a bigger picture back and look at maybe where we are relative to some of those more historical prices. We are coming into an area of congestion that goes all the way back into 2013. After that, you can see some real quick spikes up to 1670, 1665. So all in all, gold looking great as well. So we've got some really nice markets out there. But that's not your winner. The winner and lead dog by a good margin, Bitcoin. Bitcoin is up 5.65%. The entire industry of cryptocurrencies, including altcoins and those garbage coins out there, averaging about 5% gains today. So all in all, crypto space doing very, very well. You can see most of that happening in the last few hours here. Well, not last few hours, I guess since about 5 o'clock this morning was when it really started to move to the upside there for Bitcoin. So all in all, a good day for most of those major market indexes. For some of you who are looking at the altcoins, etc., good. Congrats on those. All right, that will do it for your top 7 markets. Hopefully one of those put some green into your pocket today. Before we go to 3 listener questions on cryptocurrencies, I want to show you real quick one of the factors which could have definitely been a catalyst for some of this market move out there. TJ, bring up, you had that TIC long-term purchases? There you go. That's what I wanted to see. For those of you who don't know what this is the TIC long-term purchases, and he'll make that full screen for you. Look at that. Most of the time, it's going to be above zero. And you're thinking, well, who cares? What does this mean? Look, this is put together by the U.S. Department of the Treasury. It's really called the Treasury International Capital Difference. What it measures is how much stocks and bonds are foreigners buying of ours versus what Americans are buying of foreigners. To be honest, I find it kind of tricky to track that anyway, but if we believe the numbers that are coming out, notice what we had today. A huge surprise. Sorry, this is for the month of February. A huge surprise, right? They were expecting the TIC long-term purchases to be 31.4 billion. And that was up from 27. What does that mean? That means that foreigners bought $31 billion more of U.S. securities than we bought of theirs. That's the expectation. Now, of course, in a strong market, what does that mean? That means most people are going to put their money where the markets are the strongest. And we have very strong markets right now, so it's no surprise that money's pouring in. But at what point does that become too much of a chase? The actual numbers you can see, this little orange dot on the hard red edge, orange or gold, whatever you call it, that's the expectation. The reality was we came at 85.6. So basically, we're looking at a $54 billion above expectations that foreigners were buying of U.S. equities and bonds. Therefore, you are seeing such nice moves in our equity markets. For those that were going to look at the S&P 500, we'll bring that one up here again real quick. You notice we have been just roaring, especially for the past few weeks. Again, that might largely be due to more foreign capital pouring into the market. So all in all, this is one of those drivers of price to the upside. All right, I had to throw that one in there just because I know you guys want to see some charts. Let me real quickly answer 2 listener questions that are on cryptos I've been meaning to get to, and I just haven't had time. Nick basically says, I'm tired of doing all the transactions on cryptos and spending a ton of fees. Where do you go to get the best fees? Most of my transactions are going to be on Coinbase Pro, which has got fairly cheap commissions. It's not really commissions. They call it a maker or a taker, where if you are making a market, meaning you're providing liquidity, generally the fees are lower. If you're a taker, meaning you're going to remove a seller from the market, that is a higher fee out there. I would really shop around. I haven't done the research since I built the cryptocurrency class, which is a couple years ago. It varies greatly. Most of my transactions, again, are done on Coinbase Pro simply because it's a U.S. Crypto exchange. I just don't trust all the other ones. Binance has great rates as well, but it's in China, so I'm a little bit nervous about keeping a lot of my assets there. I do have some cryptocurrencies there as well as other international exchanges, but it's usually very little. So there you go. That's my thoughts on that one. Shop around, find out which exchange you would like. Make sure that exchange has the instruments that you want to trade, and then check the fees. Because if you use Coinbase, you're going to get ripped off on fees. Not ripped off, they're just really, really high fees. Whereas if you use Coinbase Pro, it's much cheaper and it looks just like a regular trading application. All right, Michael. These are questions I really can't answer. He's in Sweden and he says, in Sweden when buying cryptocurrencies, we need to pay a 30% tax on the profits, but if I buy an ETP or a tracking ETP, I pay a little bit over 1% of the amount per year. Which one's best for taxes? I have no idea. That's a matter you need to talk to your CPA about. It depends on volume. It depends on how much you're trading of it. So to me, I really can't answer that question. Those tax laws are going to be very different. So talk to a tax professional in your country. Your second one was, can I have the same cryptocurrencies wallet, example, on 2 phones, 1 computer, or is there a limit? It depends on the wallet. Yes, there are applications out there where you can have it on multiple devices. I have one on my iPhone here, which is also on my iPad. So you can have it on multiple. It depends on the application itself. If you're using different wallets, please be sure that you check all sources of information. A lot of people like to say bad things about a specific wallet, but if you look, the preponderance of evidence is good out there. So make sure that you are checking which wallet you're using and look for any nefarious activity or any issues that may have come up, because remember, you are putting some valuable assets in the trust of that wallet. If it's hackable or has issues in the past, that could be a danger for you. All right, is Wayne over there? I'm getting a head shrug. Really? Okay. Well, we may not have Wayne Citron on the program. I was kind of hoping we would have. Makes my job a little more difficult when all of a sudden on the fly I don't realize I have my guest out there. So we'll have Wayne Citron. I'm pretty sure we'll have him right after a quick break. If you guys have any questions for myself or Wayne Citron, who will be here, I promise you he'll be here, send them on in at powertradingradio.com. You can click that little button there that says Power Blast, or join the discussions on our YouTube channels. I'll get to all those as soon as we come back right after a short break.
What if you knew the income strategies professional investors used? The strategies designed to generate active income from the financial markets. After all, no one's going to care more about your money than you.
I learned that I can be in control of my 401k.
I used to work for money, now I have my money working for me.
With the right training and guidance, you can learn the skills to become a more confident investor and make your money work harder for you. Want to find out what's possible for you? You can, as long as you're willing to take the first step and call OTA today.
Call for your free tickets right now, and you'll also receive a free Professional Insiders kit loaded with lessons from some of our top instructors on topics like enhancing your retirement strategy, capital preservation, and income generation. The Professionals Insider Kit makes it so you can get started right now.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today.
Click is something I wish I had when I started because it facilitates the learning process a lot quicker.
This is not about taking many trades, it's about taking the right trade.
It helps me save myself from myself. It's just a revolutionary educational tool. It just propels you through the learning curve.
The biggest shock for me is the level of innovation that happens within the company, and it's continuing.
Is just perfect in this new century of trading.
Everyone's on the same side, and I think that's what I love about it more than anything else. Helping each other, supporting each other, all with the same objective. Again, wonderful.
There's no mountain high enough that the leaders in this organization won't climb for their students. They'll just never give up.
It can only help. It can only make one a better trader.
Gives you one of the most valuable things we all have, and that's time.
Welcome back to Power Trading Radio Live with your host, Merlin Rothfeld, and today's special guest.
Hello, everybody. Welcome back to Power Trading Radio. Merlin Rothfeld with you for your Tuesday edition. It's Taco Tuesday out there. Our guest today had been having several tacos today. We've got Wayne Citron on the program. Wayne, how you doing?
I didn't have several tacos.
You didn't have several tacos? What did you eat today? I know the student kitchen over there was tacos, right?
Listen,
I'm working real hard to lose the 25 pounds I put on since I started working with OTA, okay?
They will call it it's affectionately known as the Online Eating Academy, but that's, within the confines of the walls. We've let the cat out of the bag. So those of you who have dietary restrictions,
Okay.
it's challenging. You're in Irvine. Always a pleasure to see you. What are you teaching this week?
I teach futures. I pretty much specialty, and that's my specialty is futures.
Your specialty is
That's what I've been doing basically forever.
And Fed Fund Futures is basically what you've been doing forever. So let me start there with a question about Fed Fund Futures, because there hasn't been any deviation of the path. And I think part of where, I'm going to make an assumption here, when you were on the floors out in Chicago, part of what made that interesting, obviously, was the leverage of that futures contract, but also the unknown with regards to where rates are going to go. There was a lot of speculation, so there was always movement going on. Right now, it seems like it's fairly transparent, right? There isn't anything really that's catching anybody off guard from any of the statements made by any FOMC members. It's all pretty in line. Does that change trading those Fed Fund futures for you because there is almost maybe that volatility or the uncertainty is removed from it?
To some degree.
Yeah.
Yeah. To some degree. We talked about this once, must have been about a year and a half ago or so.
Time flies. I don't even know what day it is.
Yeah, no kidding.
Other than Tuesday, because the tacos.
Okay. But no, come on. In all seriousness, though, we talked about this about a year and a half ago. Remember the movie Wag the Dog?
No.
Really? I think it was Al Pacino.
Wag the Dog, TJ? You've seen it? TJ watches all the really obscure movies. TJ's nodding.
It was about how the media can manipulate, right?
All right.
Literally, sometimes war,
Right.
Well, I'm not, trying to go there, but what I'm saying is sometimes that the Fed has become so transparent that they're actually dictating to some degree the market rather than the other way around.
Right.
It used to be in the old days that the market would kind of tell the Fed what to do.
Right.
Now it's almost become the opposite, where the Fed is so transparent that they're putting out there, hey, this is what we're doing.
Right, right.
And I think to some degree that they've actually become too transparent. I really do.
And what would be the disadvantage of that? Because you would think that transparency is good. Obviously, there's many areas of our lives where transparency is great. The more transparent you are, generally, the fewer problems you have because there's no unknowns, there's no uncertainty. In this case, you say they're too transparent. Why would that necessarily be a bad thing?
Well, because the Fed is basically telling you that we're going to be continuing with really easy money, right? And what does that lead to in the equities? Continued bullishness, or it can.
Which is great for the average investor. This is a good thing.
For the average investor, this is a good thing until it becomes unsustainable and perhaps bubble-like.
Okay.
That's number one. Number two, should the Fed be telling the market what to do, or should the market, by its own, what word am I searching here for? By its own actions, by its own trading, should the market be telling the Fed about the condition of the economy and so forth and so on regarding whether or not we should be in a tightening mode or an easing mode? Mm-hmm. You got plenty of information in terms of inflation and GDP and things like that, right?
Yeah. So if you trust those numbers anyway, I do not believe those numbers, but I have no choice. That's what I'm given.
But those are the numbers that people are going to gauge off of. Whether you believe them or not is sort of irrelevant, no offense intended.
And you're absolutely right. It formulates my opinion or actions, but you're right. Who cares what I think?
Right. And, right now, we always talk about this. If you pull up March 21 Fed funds.
See if I can get it.
FFH 21.
20 or 21?
21.
I don't know if I get it. I don't get them on this platform.
Oh, really?
Yeah.
Yeah, you can get it on click ZQ.
ZQ.
H21. Should give it to you. Okay.
Survey says no. I don't know why I don't get that one.
May I just...
Sure, you go for it. Have at it.
All right.
Working it over there. While you guys the viewers, you guys are great. You're while he's getting this one ready, I'm going to go to Brendan real quick. It says finally got set up with Click with delayed data, but it appears that some of the tools we were shown are not integrated yet. Any word on the grid for non-mastermind students? I don't know about non-mastermind students. I know that they're working tirelessly to get the grid levels in there. I believe we're going to have Mark Greco on the program on Thursday, which will give everybody an update on what the new features and functionality are. I'm eagerly awaiting that one because the beauty of being able to just simply click on the grid and then have it populate your charts already with those supply and demand zones is a total time saver out there, an educational tool I'm looking forward to. So,
yeah, it would be nice.
Did you get it?
Well, what I have here is what is the current last price there? Around 98.
Yeah, you're a little bit higher. Yeah.
All right, what's the last price?
98.44. Yeah.
All right, 98.44. Now, if I'm not mistaken, and I'm 99% certain I'm not, if over the course of the next 1 year, the Fed was going to cut rates, this contract would be trading, instead of 98.44, it would be trading roughly 50 ticks higher, because it's an inverse relationship, right? Which means that it would be trading 98.94. And if I'm not mistaken, the March 21 Fed funds contract is trading right around, I believe, 85.
Okay.
Which means that you probably have, over the course of the next year, at least one more cut in, and probably about, I'm going to guess off the top of my head, a 70 or 80% chance of a 50% total cut over the course of the next year.
When you were very active with this one, I'm looking at this chart right now, and I mean, this is one of those, if you strip out the fact that this is the 30-year Fed funds futures, you guys can see on the chart here, if you were to present this to me, I'd say, man, this is a crazy security. It's got gaps and flat periods. This thing is very, very odd trading behavior. Of course, this is impacted significantly by speeches from the Fed, by anticipation of the market, obviously by rate cuts by the FOMC, et cetera.
No, not only that. Here's something that when the Fed makes an announcement, okay, it goes from A to Z without stopping.
Right, as you can see, this huge, it went from you're at 97.60, and next thing you know, you're at 98.10. 50 basis point assumption. That's a pretty big jump. Were there periods, because you know when the announcements are coming out, right? It's telegraphed. We have these meetings periodically. And
8 times a year.
8 times a year.
2 o'clock Eastern.
Would you even think of trading it when it was not the period? Because, I mean, look at this flat period here. I mean, if you were in the hospital, you're dead. That's flatline. There's nothing going on here except for these little pops at the end. So, I mean, was there seasonality to it? I'm just kind of, because I've never traded the Fed funds futures. You know, to me, I trade in S&P, I'll trade NASDAQ, I'll trade commodities because I know there's constantly action. It's interesting that this contract for just months will go sideways and do literally nothing.
Yeah, but the spreads between the months is what we used to trade. And to some degree, we would trade the outrights also. But I would say the pit was about, of 100% of the traders in there, I would say 95% spreaders. So we would trade one spread, we would trade a lot of outright spreads, and we would trade a lot of butterflies, spread against spread. You know what that means, a butterfly.
Yeah, and you actually explained them on here on the show a couple times in the past on kind of how you would do that.
Okay, so if you're looking, long story short, if you have a Fed meeting, and let's just say hypothetically it's December, let's just say that the meeting is on the 31st, the end of the month, okay? And it's the middle of the month, and the spread between between the November and the Dece is trading 12.5 points. Okay, that's telling you they're pricing in a 50% chance. So if you think that the economy is like really roaring and bullish, and the numbers are going to continue being bullish, okay, which means it enhances the likelihood of the Fed actually cutting, then you might buy that spread at 12.5, thinking it's going to go to 25.
Right.
Does that make sense?
It does. Yeah,
right.
It's funny because we don't have the visuals here because I don't have the month contracts. But when you did that example, you did it a couple times. It's very clear when you see both charts side by side, and you can see kind of the opportunity there.
And ironically, and I know the students who are listening might find this really, really hard to believe, but occasionally, not all that often, we were able to put on ratio spreads that no matter what the Fed did, you'd make money. If the Fed went, you would make money. If the Fed didn't go, you would make money. That didn't happen that often, but it did happen from time to time.
I'm curious. I want to see how this has changed over the years. If there's been strategy or tactics that's had to change. We have to take a quick commercial break here. I noticed you guys have got some questions coming in for Wayne. If you have some, please feel free to send them on in at powertradingradio.com or go to your YouTube channels while you're out there. Say hello to your family and friends and our social media senders on Online Trading Academy's YouTube page as well as Power Trading Radio. We'll be right back with Wayne Citron after a short break.
Learning this way is fine when the stakes are low. But when the stakes are high, you need to rely on skill, not just knowledge. At Online Trading Academy, you build your skill one step at a time. We teach our students to trade and invest with a strategy, not a hunch. You learn our methodology, then practice it. You get to make mistakes and ask questions, and watch instructors make live trades. Develop your skill the right way.
Meet Mac. As a trader, he liked the signals that came from technical analysis tools, but they didn't help him find the best trades consistently, so he searched for a new approach. Mac attended Online Trading Academy's free class and discovered their core strategy, a trading methodology that spots when big banks are likely buying and selling, so everyday investors can too. Mac carved out a path to trade and invest with confidence, and so can you.
Call 888-304-8723 or visit us online at tradingacademy.com and schedule your free class today. You're listening to Power Trading Radio live. Watch the show live or on the archive at powertradingradio.com and YouTube, or download the podcast from iTunes or wherever fine podcasts are downloaded.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rothfeld in with Wayne Citron for your Taco Tuesday afternoon. We were talking about Fed Fund futures. Wayne spent much of his floor career out there trading those. Of course, he trades other assets as well, or other instruments. I want to get to this question that came in from Brendan. He says, do you have any special tricks for, or let me read. I can start all over. I feel like it's a Monday for me.
Take it from the top.
Take two. Do you have any special tricks for enhancing probabilities on your futures trades? Is there any setup that you have come to rely on to make steady income?
Did he say tricks?
Tricks.
No tricks. No tricks.
No tricks.
No tricks. And if you want my honest opinion about trading, trading is all about being consistent. So if you want to use the word steady and substitute consistent for it, I would say that once you have achieved some degree of consistency, and it's not necessarily a dollar amount. It doesn't have to be large. It has to be consistent, even if it's on a small level. If you've attained that consistency and you feel that you can continue doing that moving forward, well then pretty much, I don't know how to put it other than to say, pretty much you've got it. The rest is up to you now. You start out trading small, you might add to your size, but the name of the game is to first be consistent. Mm-hmm. The one thing that I do try to teach, or at least I should say educate the students on in class, is the fact, and I do believe this really does help a lot, the fact that when most novices, most newcomers look at a chart, they basically see sticks, red sticks, green sticks. And what I try to impress upon the students is that if you really, really spend a little time studying those sticks, you will find out that those formations are laden with information. Every candle has information. Yep. And you do see, now if you want, I don't really refer to this as a trick. What's your name?
Brendan.
But Brendan, if you spend a little time looking at high probability formations, such as bullish engulfing, I'm sorry, not bullish, bullish haramis, bearish haramis.
Even engulfings, there's
bullish and bearish engulfing.
Yep.
And if you spend a little time studying those formations, you will immediately spot them. And if you can put them together with core strategy, or oftentimes you put them together with a counter trend move, mm-hmm. that would help you a lot. I believe it would help you quite a bit.
I always hate the word steady money because it implies that, well, there's something you can do just like, pull money out nonstop. I think that the key there is you mentioned consistency. The other part of it is we're all focusing on how much money we can make. The key to being consistent is making sure that you never have that outlier down day that just erases your account. So more importantly, and this is something that I focused on when I was teaching actively, was make sure that you always focus on your downside before you start thinking about how much money you can make, right? And that all comes back down to having rules in place. Your discipline, your money management, your tactics, your strategies, whatever those may be, it has to fit your trading plan, and you have to follow it. You've been doing the same thing for many, 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 many years, right? And it's the old adage, if it ain't broke, don't fix it. I'm sure over that your career, you have made minor modifications as the market may dictate or as technology comes in and changes the landscape of how you interact with the markets. But overall, that strategy is the same. And for those, you mentioned tricks or strategies, Brendan. There's a guy out there, Bulkowski. He's got a book called The Encyclopedia of Chart Patterns, which you can probably type in encyclopediaofchartpatterns.pdf in Google and find it for free. Just saying. There's also a website called The Pattern Site, which is really good. And what it does is, Wayne mentioned a few different formations. He mentioned, bullish and bearish haramis. By itself, they mean nothing, right? By itself, it's just two candles. It's all relative to the location in which you find these candles.
Context.
Right. It's where it is in that picture. And then it's not just that. Now you have to go, how do I trade it? What are my rules when I find this formation? How do I trade it? Is it on a break of the baby? Is it on a break of the parent candle? How do you actually execute against those? That's, to me, the key, which gets you to that point of quote-unquote steady, is making sure that you follow those same rules every time. It will be different for everybody. It's hard for me to explain why that is, but everyone has different rules on how they trade these different formations. Wayne mentioned the haramis. I actually love shooting stars and gravestone dojis and things like that, and hammer formations. Those are mine. I love those ones, but I have my rules in place for following those. They are inherently lagging. I know that's going to sound weird, but normally when we're looking at supply and demand zones, that is the actual turning point. The probability where things may turn. Now, if I can get that in conjunction with a candlestick pattern, which will be much more reactionary, it's going to react to the supply demand zone, then I might be setting myself up for a high probability trade. But remember, none of these things by themselves are the answer. It's as we start to pile on all these different pieces of odds enhancers or probability increasing, that to me is where you start to get steady results.
Well done. No, really. I mean, I can't disagree with it. And you mentioned a couple others that are really good. The gravestones.
Yeah.
Shooting stars.
Yeah.
And this is just information that you can use. And if you don't mind my embellishing just for a moment.
Embellish on.
The one thing about being a trader, be it with, no matter who you might be with, what group you might be with, the one thing is it's a never-ending and never-stopping education. I mean, you're always exploring new ideas and getting new ideas put to you, and that never really stops. So,
yeah.
And that's great to be in an organization like OTA where you can share ideas with other traders.
Yep.
And I always tell the traders, stay in touch with each other.
Absolutely. It's a community aspect, something they all spend a lot of time and effort to build, especially when you look at Mastermind and Clubhouse. I see some comments coming in about different candlestick formations. Guys, remember, every candle, and there's a whole bunch in the chart here, there's a ton of them. It's a battle. It represents literally a war between two factions, the buyers and the sellers. That's all it represents. It represents all the news that was relevant during that moment of time. It represents all the emotions that were relevant. We can get a great sense as to what was going on with those buyers and sellers by looking at those candles. And what's more interesting for me is if you look at them on a monthly, if you look at them on a weekly, a daily, an hourly, 60-minute, which is an hourly, I just repeated the same one, 5-minute or 1-minute chart, that story changes. So while you may see, excuse me, a huge bullish rally and an amazing candlestick formation on a 5-minute chart, you can look at it on the daily chart and it doesn't even exist. Important to always look at different time frames to help us understand that there's many faces to it. I always make the analogy that if I turn my back to the camera, no one could tell my eye color. Well, you need to turn and pivot so you can find out what the eye color is, and that's looking at things from a different perspective, which is why we always look at multiple time frames. Done.
Got you.
Got me. Let's see. Didn't take Forex futures. What is a shooting star called when it's at the bottom? That'd be a hammer formation, but it's inverse, right? So a shooting star is going to be a small real body with a long topping tail at the top of an uptrend. So at the top of a rally, like if you saw right now, as these markets are ripping to the upside, a small real body and a long topping tail, that's a pretty good sign we're probably going to see some downside movement in the next candle. a hammer formation would be the end of a big downtrend, which we haven't had a downtrend in quite some time. But a hammer would be a small real body with a long bottoming tail. That's the exact opposite of a shooting star. Wouldn't the larger candle be an average of the smaller candles? Wouldn't a larger candle be?
No, because you're really looking at the formations that the candles have put together, and they do tend to be repetitive.
Mm-hmm.
So you do tend to spot these formations. You might see nothing on a 15-minute, and yet if you go up to a daily, you might go, oh my God, look at that. And I will give some kudos to, oh boy. He did a really, really good.
Apparently not that good.
It was good. It was good. The instructor, a younger fella.
Ryan Watkins?
No, younger, not 6'4",
Oh.
young, very young.
Okay.
He and Hour with the Pros.
Yeah.
He and I kudos to him. I always recommend the class watch it. He did a Hour with the Pros, basic candlestick analysis, and just by the name of that, you'll be able to find it.
Yeah, so if you are an Online Trading Academy graduate, go to log into my OTA, go to Hour with the Pros. Obviously, that's behind the wall there, so anybody who's not an Online Trading
Alexander Perna.
Alexander Perna. Cool. Yeah, good stuff. We actually have a webinar that I did probably 2 years ago now at otacademy.com as well that talks about the basics and psychology of candlestick formations. Something that by themselves, again, I don't think are the answer, but can they help you understand the battle that goes on whatever time frame it is that you're looking at? Absolutely. Remember, it's all psychology. It's all what is this person thinking, what is that person thinking, and where do I think it's going to go next? Bottom line about trading. All right, Wayne, tell me about your upcoming schedule. Are you going to be traveling a bit more? I mean, I'll get you out here for once every 3 months, I think. You're escaping Chicago's horrible weather right now. I was talking to a couple of Chicago traders recently like, I hate you, Merlin.
No, this is the easiest winter I can ever remember. Swear to God.
Really?
Yeah.
Was it only like negative 16?
No, we haven't had, I mean, I don't think we've had more than 3 or 4 days below, well, maybe 10 total below.
Hashtag it's snowing in Chicago right now.
It's winter, it's supposed to.
So see, that to me is a cold day.
Okay.
If there's snow, it's cold. Jeez.
It's been a very, okay, I've taken out my snowblower once.
Now the truth comes out. Yeah, I put on a jacket once this year, just so you know. All right, let's talk about our weather battles over here. You
So
can see
where am I
going
going
next?
Let me see. I'll be in Seattle, which I love to go to. Just got back from Long Island. Seattle. Where else? I had Baltimore on the schedule. I don't know if that's still a go or not. Seattle's for sure next month.
Right. I'll put Seattle and Baltimore.
Yeah. I think there's one other. I just don't remember where. And Seattle's great because, you know, it's just beautiful out there. But, you know, coming back to what we were talking about, the gentleman who asked the question, I hope, you know, remember, you know, what I always try and tell people, because I truly do believe it, you've enhanced your probabilities if you can put some of these candle formations together with core strategy.
Sure, absolutely. And that's the way we present it in class. That's the way we teach these things. It's like, look, core strategy is your foundation. How you build your house on top of that foundation is up to you. This is just one component of it. And on Scammell, you are right to an extent. You said, so the bigger candle isn't an average of the smaller candles. It's not an average. It's the summation, right? Because let's say I've got a candle that's, all right, let's say that this my phone is one candle. This is the daily. Right? This is your daily candle. It's black, which means it opened at the top, closed at the bottom. It's all down, right? If we were to split this up into a 5-minute chart, I could have one candle on a 5-minute basis that goes from the top all the way to the bottom, and then the next 45 minutes worth or 55 minutes worth of candles just stayed here at the bottom and didn't do anything. Or I could have it come down, up, down, up, down, up. All I know by looking at the daily is that it opened here and it closed right there. That's all I know. So that's why we want to make sure we look through it into a smaller time frame to see what was the pattern within that daily, right? Because if it just opened here and closed here, that's some information. But if I split it to a 5 and I can see that it just went in one candle down here and stuck, well, that's something abnormal. Did it slowly traverse down? So it's not the average, it's the sum of all of the candles just showing you an end result. So the bigger candle is generally a result of much smaller candles all added together, right? Just show you the pattern, the life of it. I actually did a great video called The Life of a Candle, which you can find in Core Strategy On Demand. If you guys are Core Strategy students and you've taken Core Strategy with Online Trading Academy, check it out. It's in the self-paced content on demand. It's called The Life of a Candle. I built this one out. It's got some great analogies in there, and this is one that I'm very, very passionate about. So check it out and let me know what you guys think for those that have access to it if you'd like to know more about candlestick formations. Wayne, thanks so much for coming on today. I appreciate it. I hope we get some action. These Fed Fund futures are boring the heck out of me right now.
Again, if you were trading the spreads, I tell you that's...
There's some life?
Yes.
All right, guys. Wade Citron is our guest today. If you want to see him in action, he mentioned Seattle and probably Baltimore. There are definitely some upcoming stops along the way. But if you'd like to know more, book a seat for those 2 classes or retake them on a space available basis. Contact your local center. If you don't know what center is closest to you, it's pretty darn easy to fix. You can go to powertradingradio.com. There are 2 little links that say free class. One's at the top of the page, one's on the right-hand side. If you click on that one, type in your zip code, that'll tell you which of our 48 physical brick-and-mortar schools are nearest you. Each one has free classes, paid classes, community events, and much, much more. And there are also on-demand courses and self-paced content as well, so I'd encourage you to check that out. All right, we're going to take a quick break. When we come back, I have economic announcements and earnings calendar information for Wednesday, your Hump Day session. We'll be right back after a short break.
We've never seen a platform created with the driving principle of helping people consistently make better trading decisions. We know consistently successful investing and trading is about much more than simply taking advantage of the right opportunities. It's also about passing on the wrong ones. Click helps you score potential trade opportunities and calculate stop levels, customizing risk management to be in line with your personal trading plan. Click is also a smart platform. Because it links to OTA's student portal, Click can serve a custom experience to every user, based on what they trade, based on how they trade, their experience level, which OTA classes have been completed, and much more. Simple enough for new investors and powerful enough for the advanced trader, all while integrating OTA's award-winning education, tools, and services.
When we walk into a class and talk to students that have been trained by other platforms and now trading on Click, they're just ecstatic. They can't wait to have it all connected to live execution, which will be coming soon towards the end of the year. And everybody here is very, very excited.
I love it. Not only do I love it, everyone I talk to that's used it loves it. It's so simple and easy. Breaking down the process of core strategy to placing a trade is just phenomenal. And it really shortens the learning curve.
It's one platform to get familiar with that you can then apply to futures, forex, options, proactive investor. It's almost like somehow my thoughts have been distilled down into a sequence of steps. This platform, I feel that I could become an expert in a much, much shorter time, but with a great amount of confidence around actually getting to be able to get the screen to look like I want it to. The fact that Click is an online platform is unbelievable. I'm placing a trade that I'm comfortable with and I'm ready to go, bring it on.
Welcome back to Power Trading Radio, live, fueled by Online Trading Academy. For more information, visit powertradingradio.com.
Hello, everybody. Welcome back to Power Trading Radio. I'm Merlin Rothfeld with you for your Tuesday edition. This is the beauty of the show, guys. It just kind of goes where it goes, and I like that our guest today, Wayne Citron, brought up candles. It's interesting hearing these old floor traders talk about candles because remember, back in the day, they didn't have charts. I know it sounds odd. They just had price in the old day. We're going way back here. I actually met a guy. He was an instructor at Online Trading Academy for quite some time, Stan Ehrlich, and this guy would unroll. He had like a architect would have these rolls of paper, right? And he'd unroll them, and it was years of data on things like the S&P 500 or different commodities, all drawn by hand, showing the open, high, low, close for every single day he drew by hand. And he felt it gave him a huge competitive advantage, which I believe it would have. Most of these guys were trading off of psychology and trading off of the behavior of the big dog, right? The lead institution, the guy who was moving that market. And trust me, if you're sitting on the floor of Chicago Mercantile Exchange, you know who the lead guy is. You know who is the absolute boss in that pit. And you start to learn what their signals are. It's like a poker game, right? He'll have his tells. You know when he's trying to buy something. You can tell by his actions. That's how it used to be. And that transition from that to screen-based trading, or actually introducing charts into the equation, changed a lot. And that's something that Sam and many others have talked about over the years from Chicago, is saying the footprints from the institutions are all over the place. It's just understanding how to look for them. I believe candlesticks are certainly one of those areas where we not necessarily see the institutions, but we can see the behavior of buyers and sellers, period. Again, some of you got some some content out there. Yeah, the book was The Encyclopedia of Chart Patterns. I think, Brendan, you said you got you found the book already. I know, I found it a long time ago. What's interesting about the pattern site and that book, The Encyclopedia of Chart Patterns, which probably needs to be updated, is it goes through all of these formations you hear everybody talking about and tells you their probability of working as they review them on thousands of charts. Remember, nothing works 100% of the time. There's always a failure point, always a failure point. It's our job to manage the risk of that failure point. So if it's wrong, who cares, move on. But I want to be using chart formations which give me a high probability, period. Whether that's a candlestick formation, whether it's a chart pattern like an ascending, descending triangle, or things like supply and demand, which are showing you kind of where those institutional turning points have a higher probability of being because of the price action that's happened there. So use all the tools at your resource to put those odds in your favor. Just remember that candlesticks are generally lagging pieces, although they can be helpful. If you'd like to know more, you can... we mentioned the Encyclopedia of Chart Patterns. We mentioned the website, which is the pattern site, is for candles. We talk a lot about them in our content, Online Trading Academy. There's also a video I put together called The Life of a Candle. Thank you, Unscammable, for calling me Gwyneth Paltrow out there today. The Life of a Candle featuring Merlin Rothfeld, not Gwyneth Paltrow. She might have done her own one, but mine's way better. There's also a bunch in the Core Strategy On Demand for those of you who want to check that one out. All right, I'm going way long-winded here today. Let's go real quick and see what we've got cooking for the next couple of days here. I know there's a lot of information coming out in the next this week, but I want to make sure I get to all the content because we are going to have to flip through days here. We skipped Monday, and I didn't even get to see Sue O'Grady in the program. I'm a little bit bummed about that. Go to our Wednesday session. Here's what we got cooking for Wednesday. All right. A lot of information coming out with regards to inflation for different parts of the world. You can see here for the U.S., we've got Core Producer Price Index, as well as building permits and FOMC meeting minutes. If you're looking for the euro, you have current account as well as the German GfK consumer climate. By the way, the German ZEW economic sentiment report numbers came out pretty ugly today, which is part of the reason I think you're seeing that euro continue to just fall apart. It is just ugly out there for the euro. British pound has CPI and PPI, so does the Canadian dollar. If you were looking at the Australian dollar, well, there you go, unemployment rate, and then New Zealand has PPI input. Moving at the earnings calendar. Yeah, there's still some stuff coming out. Yeah, just the stragglers, I would say. NetEase, Analog Devices, Energy Transfer, or ET. Hopefully to phone home with some good earnings. I don't want my throat's going crazy. Entergy, Williams Company, Realty Income Corporation, and finally, options trading with Esteban Moses. Steve Moses will be our guest on the show tomorrow. Pretty excited about that one. He's always fun. He's always got some good content out there for us, and hopefully we'll steer it down the path that the viewers would like to go. But he will be our guest tomorrow, starting at 3 p.m. Pacific, 6 p.m. Eastern Standard Time. Hopefully you guys get your questions in. If you have them, feel free to send those questions in via powertradingradio.com. That's the easiest way because they come to a database and we can get researchers on the different questions. So if you have something, send it on in 24 hours a day, 7 days a week, or you can always join the chat, the discussions out there on our YouTube channels, which is Power Trading Radio, as well as Online Trading Academy. If you like today's show or our guest, give us a thumbs up. If not, and you're going to give us a thumbs down, I'm okay with that as well. Just please, in the chat below, let me know why you gave us a thumbs down so we can maybe make that show better. All right. Hope you guys had a great session out there. I will see you all tomorrow. Have a fantastic evening, everybody. Take care.
You're listening to Power Trading Radio Live. Watch the show live or on the archive at powertradingradio.com and YouTube. Or download the podcast from iTunes or wherever fine podcasts are downloaded.